Welcome back to the Deep Dive, everyone. We're hitting Lesson 7 in our finance series. And this one's a little different.
Yeah, a bit of a twist.
It is. We're doing a recap.
Yeah. We're looking back at everything we've learned so far in these finance deep dives.
Mm-hmm.
So it's like, if you've been with us from the start, this is a great refresher.
Yeah. And if you're new, this is a great way to get caught up to speed.
Exactly.
And if you feel like you want to dig deeper into any of the lessons, just go back and listen to the previous episodes.
Exactly. We've got all the details there for you.
Okay, so let's get started with Lesson 1, financial terms.
Yeah.
Now, I know terms can sound kind of boring,
Right.
but they're super important.
They are the foundation.
They really are. They're the building blocks of, like, everything we're talking about in finance.
Yeah.
We're talking about revenue, costs, and profit.
Right, the essentials.
Yeah, the essentials. So starting with revenue, that's the money a business brings in from selling its goods or services.
Yeah. Like that's the fuel for the engine, right?
It is. It is. But then you've got costs, which are the expenses a business incurs to generate that revenue.
Mm-hmm. And it's important to distinguish between fixed costs and variable costs, right?
Yes, definitely. Tell us a little bit about that.
Sure. So fixed costs like rent or salaries, they stay pretty much the same regardless of how much you produce or sell.
Right, they're kind of like the overhead.
Exactly, the overhead. You have to pay them just to keep the lights on.
Right.
But then you have your variable costs, and those change depending on how much you're producing, things like raw materials or packaging.
Mm-hmm.
So the more you make, the higher those costs will be.
Okay, and knowing this difference is, like, crucial for your financial strategies.
Right, absolutely. Absolutely. For example, a company with really high fixed costs might need to sell a lot more just to break even, compared to a company with lower fixed costs.
Right, right. So you've got to understand how all that fits together.
Mm-hmm. That interplay between fixed costs,
Yes.
variable costs, and your profitability is key.
Yeah, for sure. Now, the big goal, obviously, for any business is profit.
Of course.
Right.
Duh.
So what is that exactly?
It's really just the difference between your total revenue and all those costs.
Okay, makes sense.
But, and this is important, achieving and sustaining profitability, that takes planning, efficiency, and a real understanding of your financial landscape.
It does. It does. All right, moving on to Lesson 2. Sources of finance.
Yes.
Every business needs money to operate, but where does that money come from?
Right, the age-old question.
It is. And we talked about two main ways: internal financing, where you use your own resources.
Right, like using your savings or reinvesting some of the profits back into the business.
Uh-huh. We call that retained profit, right?
Yeah, exactly. Or even selling off assets you don't need anymore.
Mm-hmm. So it's all about being resourceful, using what you've got.
Exactly.
Now, that can be a great option for, like, new businesses or businesses that want to keep total control.
Right, you're not answering to investors or banks.
But there are downsides, right?
Yeah, for sure. Sometimes you need a bigger chunk of cash to really grow or take on something new.
Right, right. Like if you want to scale up.
Exactly.
Okay, so that's where external financing comes in.
Mm-hmm.
So what does that look like?
Well, it can mean taking out loans, issuing bonds, or getting investors on board.
Mm-hmm. Each with their pros and cons, of course.
Definitely. It depends on your specific needs, how much risk you're comfortable with, and what your long-term goals are.
Okay, and one thing we should clarify is profit and cash flow aren't the same thing.
Oh, no, not at all. Not at all.
And that leads us to Lesson 3, cash flow.
Right, the lifeblood.
It is. And it's easy to get confused because you could be making a profit but still have cash flow problems.
Absolutely. And that can be a real danger for businesses.
Definitely. So what exactly is cash flow?
Well, think of it like the actual movement of money in and out of your accounts.
Like a river.
Yeah, kind of. You need that positive flow, that money coming in to pay your bills, maybe buy new equipment, and just keep the business running.
It keeps the lights on.
Exactly. And
Yeah.
that's why cash flow forecasting is so important. It's like looking ahead to see what's coming.
It's like having a financial GPS.
Exactly. It helps you prepare for those ups and downs so you're not caught off guard.
Okay, I see how this all starts connecting now.
It does, doesn't it?
It does, it does. All right, let's move on to Lesson 4, break-even analysis. This is all about finding that sweet spot where your business is making enough money to cover all its costs.
Right. You're not making a profit, but you're not losing money either.
Exactly. And this is so important for business owners.
Oh, it's critical, especially when you're starting out. It helps you set realistic sales goals, price things right, and make smart decisions about growing or investing.
So how do you actually calculate this break-even point?
Well, there's a formula for it. It's your fixed costs divided by your selling price per unit minus your variable cost per unit.
It sounds a little complicated.
It might look that way at first, but once you break it down, it's actually pretty straightforward.
Okay, and what are some of the insights you can get from doing this analysis?
Well, for instance, if you find out that your break-even point is way higher than what you're currently selling,
Uh-oh.
yeah, then you know you need to either boost those sales, cut costs, or maybe rethink your pricing.
Right, so it gives you a real roadmap.
Exactly.
Okay, let's shift gears now and talk about putting your money to work for you with Lesson 5, investment. We're not just talking about spending here. We're talking about using your money strategically so it makes you more money.
Right, making your money work smarter, not harder.
I like that. So whether you're investing in new equipment, marketing, or even training for your employees, the goal is to get a good return on that investment.
That's right. We call that ROI, return on investment.
Right. And we looked at an example. Remember BrewBliss?
Yes, the coffee roast.
They invested 10,000 pounds in that roaster, which helped them make more coffee, and ultimately brought in an extra 3,000 pounds in profit.
Mm-hmm. A 30% ROI.
That's pretty impressive.
It is, and it shows you the power of a good investment.
Yeah, so ROI is a really useful tool for figuring out if your investments are actually paying off.
Absolutely.
Now, before we jump to Lesson 6, I just want to remind everyone that if you're feeling a bit lost or want a deeper dive into any of these topics,
Please go back and check out those earlier episodes.
yeah, we've got you covered. Now, in Lesson 6, we tackled something that can be a bit intimidating: analyzing financial performance.
Oh, yeah, the world of financial statements.
Right, but they're really essential for understanding how a business is doing.
Absolutely. We looked at two main statements: the income statement, also known as the profit and loss statement, and the balance sheet.
So can you break those down for us?
Sure. The income statement, that tracks a business's revenue and expenses over a specific period.
Okay, so it shows you whether they're making a profit or losing money.
Exactly, exactly. Like a financial report card.
Got it. And what about the balance sheet?
That's like a snapshot taken at a specific moment that shows what the company owns, what it owes, and the ownership structure.
Okay, so it's a way to see how financially stable a company is.
Exactly. And we talked about all the components of these statements, like revenue, costs, and profit on the income statement, assets, liabilities, and equity on the balance sheet.
Right, and understanding those pieces and how they fit together is crucial.
It is. It helps you make sense of the bigger picture.
Now, there are also these things called profitability ratios.
Like gross profit margin and net profit margin.
Right. Can you explain those?
So they basically show you how efficiently a company is operating and how well they're turning sales into profit.
Okay, and we saw this with BrewBliss again, right?
Yep, they had some pretty healthy margins.
They did. A 50% gross profit margin and an 18.75% net profit margin. That's impressive.
It is. But remember, it's important to compare those numbers to others in the same industry and to their own past performance to get the full picture.
Right. Context is key.
Absolutely.
All right, so we've covered a lot of ground in this first part of our finance series recap.
We have, from the basic terms all the way to financial statements.
It's been a whirlwind.
It has, but this is just the beginning. We'll dive into some more practical examples and specific situations in the next part.
So stay tuned for part 2, where we'll unpack even more insights and get you even more comfortable navigating the world of finance.
Exactly. There's lots more to come.
Welcome back, everyone. Glad to have you with us as we keep this recap rolling.
Yeah, we're diving into some more practical stuff now, real-world examples that'll show you how these concepts actually work.
Exactly. Because it's one thing to know the terms, but it's another to see them in action.
Exactly. So let's go back to something we talked about earlier: fixed costs and variable costs. Remember, understanding your cost structure is super important.
It is. And it can really impact your decisions as a business owner.
For sure. So let's say you're running a bakery.
Okay, I love bakeries.
Me too. So your fixed costs would be things like rent, utilities, salaries for the bakers. Right, the things that stay pretty much the same no matter how much you're baking.
Exactly. Then your variable costs would be stuff like flour, sugar, yeast.
Right, those ingredients. The more bread you bake, the more of those you need.
Exactly.
Yeah.
And knowing this difference can really affect how you price your products.
Oh, yeah, for sure. Like if you have high fixed costs, you might need to sell a lot more bread just to break even.
Right, or maybe raise your prices a bit.
But then you got to be careful not to price yourself out of the market. Right?
Exactly. It's a delicate balance.
It is, and that's where financial analysis comes in to help you make those tough decisions.
Okay, let's move on to another important topic: cash flow forecasting.
We talked about this before, but it's worth repeating.
It is. Cash flow is like The lifeblood of your business.
It really is. It's what keeps things moving.
And forecasting your cash flow, that means predicting what's coming in and what's going out.
Right, so you can be prepared.
Exactly.
Yeah.
Like if you see a cash shortage coming up, yeah, you might need to secure a line of credit or adjust your inventory or something.
Right, to make sure you can cover your expenses.
Exactly. It's like having a financial safety net.
I like that analogy.
Yeah, so you don't fall flat on your face.
Exactly.
It's really amazing how all these concepts are connected.
It is. It's like they all fit together to form this financial puzzle.
They do, they do. And as we learn more, the picture gets clearer.
Right. And it's not just about the numbers, it's about developing that financial mindset.
Yeah, a way of thinking about money that helps you make smart decisions.
Exactly. And that's what we're trying to do here, equip you with that mindset.
Okay, let's talk about investment now.
All right, time to put that money to work.
Exactly. Remember, investing is about strategically allocating your resources so they can grow.
It's like planting seeds that will blossom into, financial abundance.
I like that. So whether you're investing in your business, in the stock market, or even in yourself.
Right, like education or training.
The goal is to get a return on that investment.
Exactly. And remember, every investment has risks and potential rewards.
That's right. And that's why diversification is so important.
Oh, absolutely. Don't put all your eggs in one basket.
Exactly. Spread your investments around so you're not putting all your hopes on just one thing.
Right. It helps to manage that risk.
Okay, so we've talked about a lot of important stuff, but there's one more thing I want to touch on: financial literacy.
Ah, yes, that's key.
It is. It is. I was reading an article recently, and it said that understanding basic finance is no longer a luxury, it's a necessity.
I completely agree. It's like a survival skill in today's world.
It is. And that's why we created this whole finance series, to make this information accessible and hopefully even a bit fun.
Yeah, we want to take the intimidation out of finance.
Exactly. We want to empower everyone to take control of their financial well-being.
And I think we've made some good progress so far.
I think so too. But we're not done yet.
No, we've still got more ground to cover.
In the final part of this recap, we'll revisit some key takeaways and leave you with some food for thought.
Some things to ponder as you continue your financial journey.
Exactly. So stay tuned for the grand finale. Welcome back for the final stretch of our finance series recap. Ready to wrap things up?
I am. It's been great revisiting all these key ideas, seeing how they all connect.
Yeah, it's been fun. And, one thing that keeps coming up for me is the importance of mindset.
Oh, absolutely. It's not just about knowing the numbers.
Right. It's about how you approach finance, how you think about it.
Exactly. It's about feeling empowered, not intimidated.
Exactly. It's like seeing possibilities instead of roadblocks.
And being proactive, taking control.
Yeah, for sure. And that's why we've talked so much about things like financial planning, cash flow, understanding your risk tolerance.
Right. Those are essential tools for anyone, not just business owners.
Exactly. Whether you're managing your personal finances, planning for retirement, or looking at investments, these principles apply.
It's about making smart choices that align with what you want to achieve.
Right, right. So let's do a quick recap of what we've covered in this whole series. We started with the basics, right?
Yeah, those fundamental terms: revenue, costs, and profit.
The building blocks.
Exactly.
Then we looked at how businesses get money, those sources of finance, both internal and external.
And how important it is to choose the right approach.
Yeah, definitely. And then we got into cash flow, remember?
The lifeblood.
It is. And how crucial it is to manage and forecast your cash flow.
Right. You got to anticipate those ups and downs.
For sure. And then there was break-even analysis, figuring out how much you need to sell to cover those costs.
Right. Setting those realistic goals.
Yeah, that's key. And of course, we talked about investment.
Putting that money to work.
Exactly. And understanding that every investment comes with risks and potential rewards.
And diversification, right.
Yeah.
Spreading those investments around.
Absolutely. Absolutely. And lastly, we tackled those financial statements, the income statement, and the balance sheet.
Getting a clear picture of a company's financial health.
Yeah, really important stuff. So throughout this whole series, we've encouraged you to think critically, to ask questions.
To really engage with these concepts.
Because at the end of the day, financial literacy is about having the confidence to make informed decisions.
It's about feeling in control of your financial well-being.
Exactly. So as we wrap up this finance series recap, remember, learning about finance is an ongoing journey.
It's not a one-time thing.
Right. There's always more to learn, More to discover.
And we encourage you to keep exploring, stay curious.
Yeah, the world of finance is full of opportunities.
For those willing to dive in.
Exactly. And a huge thank you to Google Notebook LM for the amazing AI assistance in creating this content.
Yeah, their support has been invaluable.
It really has. This episode was a PLC strategy production, dedicated to making complex topics accessible and engaging. Until next time, keep learning and exploring.